Hi everyone, welcome to the session on Business Mathematics and Statistics. I am Sanjala Sahadevan. I will be taking you all through this entire lesson, right? This entire subject. So the first section, the first topic that we are going to discuss is percentages for business. So it's an introduction, it's the first basic things for us to know to go forward with this whole subject on business mathematics and statistics. So this subject is formed with some maths areas, interesting mathematical areas which are applicable to your business, right? To a business in the commerce field, in the business field, the mathematical areas that we need to know. And then we also look at some statistical areas, and the statistical areas will cover all sort of measures that you need to know to analyze data, and that data analysis would be in a business, right? So to analyze data in a business and to make some good decisions for your business, right? So as I mentioned, the first section, first lesson that we are going to see in this subject is about percentages for business, right? So as a business, we need to know how to use some percentages. This will be the basic understanding for us to go ahead into this subject more deep, right? So firstly, we look at percentages. So with percentages as in, we look at that with profits, because any business's purpose is to make profits. So when making profits or calculating profits, there are two ways to calculate profits. So one is your markup and the second is your margin. So markup is one method we are going to figure out profits, and the second is margin. So markup means where profit is considered as a percentage of the cost of sales, right? On cost, you add a percentage. So for example, if your cost is 100 and you want to add a 25% profit, you add the 25 and then your total selling price is 125. Right? So if your cost was 100, you will on top of that add a 25 or any profit you want, that's called the profit markup up. So 200, on top of that you add a 25, so your total selling price is 125. So imagine this is your cost of 100 and then on top of that you have your 25 profit, right? So this is a total of 125. This is your selling price, right? The second is called a margin. A margin is where out of your total sales value, you say my profit margin is 20%. So that is where we say, if you take the selling price, so first look at the selling price. The selling price is 100, okay? Inside the 100, you have a profit of 20, which means the remaining 80 is your cost, right? Now, in this scenario, if I take a whole box as my selling price, that selling price is 100 and I say within that, this is my profit of 20, cost of 80, right? So these two together make my entire selling price of 100. So it's a way of either communicating or it's your way of determining price, where I say on top of 100 sale, I add 25 profit, or 100 is my total sale. Inside that I am saying that there is a profit of 20. So here I am saying my cost of the sale is 100. On top of the 100, that's why I put this, and on top of that I put that cost. It's an addition. So to the cost, we increase it by the profit, right? This is the profit that I increase it by. But here, inside the entire selling price of 100, one portion is your profit, right? So if I say margin, you should know that inside the selling price I am saying, if 100 is selling price, inside that there is a profit of whatever margin percentage. So let's see an example. If they say B Limited sells a dress for rupees 80, sales, okay, for rupees 80, that means this is your selling price. So they sell it for 80 rupees at a 10% markup, right? So this is the markup. You are adding which means to a cost you have added the 10% profit, right? Calculate the profit made by B Limited. So, the markup profit is 10%. They said 10% is your profit. Remember, this is how you do a markup. You have a cost, to that you add the profit. So, now let's assume our cost is 100, right? To that, if you add a 10% profit, this signifies 110%, right? If your cost is 100, you add a profit of 10, you get a selling price of 110%, right? This is in percentages. But additionally, you know that 110% is equal to 80 rupees. So now you can work backwards. If the selling price 80 rupees is 100% cost plus 10% profit, which is 110%, then 110% equals 80 rupees. Now they want us to calculate the profit, right? So we'll only calculate profit where we take the 80 rupees, which is equal to 110%. We'll divide it by 110%, right? And multiply by 10% because the profit is only 10%, right? So, multiply it back by 10% only, so that you get the profit, which is 7.27. Basically here, by dividing by 110%, you are saying 1% is equal to how much? So, 10% is equal to this, right? So, 80 rupees represents 110%. That's the main idea. Once you get to that, you can figure out easily that they say markup of the profit is 10%. So, cost of 100 plus a 10% is equal to 80 rupees. Once you know this, you can figure out how much is 10%, which is the profit. Or you can figure out how much is the cost. The cost in this case will be 10% is the profit, so 100% is the cost, right? So 80 over 110% into 100%. So that 100% value is the cost, right? So this is an example for markup where on the cost we added the profit on top of it. Cost is 100, top of that we added the profit. Now next is a margin. A margin is where, remember, selling price is 100. Inside that 100 selling price, you have a profit part and a cost part. So that is this, okay. So here, profit margin, A Limited sells a toy at a 25% profit. 25% profit margin. Cost of the toy is 100. So cost is 100. Calculate the selling price and the profit. So here you know profit margin is 25, cost is 100, calculate selling price and they want the profit in rupees. These are the two things. So how do you do this? The margin is 25%, they said. So we in margin method we say selling price is 100. So here let selling price be 100. So if selling price is 100, within that your profit is 25. So selling price equals cost plus profit, right? Selling price is 100%. If selling price is 100%, they said margin is 25%, right? So if margin is 25%, cost has to be 75%, right? So that's the number you will calculate and figure out like a balancing number, right? That will be the balancing number. Now, like we said, cost is 75%. They said the cost of the toy is 100 rupees. So that means 100 rupees is equal to 75%. Right? That 100 rupees is equal to 75%. So that's what I have mentioned here. That the 100 rupees is equal to 75%. So if 100 rupees is equal to 75%, what do we need to calculate? Selling price and the profit. So if you want the profit, what you can do is 25% is the profit. So here 25% is the profit. So take your cost, which is 100, right? Divide it by the percentage, which is 75, because 75% is the cost, multiplied by 25. So you divide it by 75 and you'll know how much is it for 1%. Multiply by 25% because your profit is 25%. That's the 25. So this gives you the profit figure. So the profit is 33.33. So the easy way to find selling price now is 100 cost plus 33 profit will give you the selling price 133.3. If not, instead of finding profit here, we could have done another way. So here what I did is I calculated the cost as in that it's equal to 75%, equated and found out how much is 25%. So if 25% is 33.33, cost is 100, they have already given. I added 2 to get the selling price. Or in this step itself, I could have found the selling price as if cost equals 100 rupees, right? That is 75% is equal to 100 rupees, right? So we could have worked backwards and found how much is 100%, right? So that will give you the selling price. So if you calculate that 100 divided by 75%, that's your working. The working here will be 100 divided by 75%, and you'll get the same answer, 133. Right? So you could have done it that way as well. So now we are going to look at again percentages used, but now for taxes. So first we looked at how you use percentages for profits. Now we are going to see how to use the same percentages, but now you will be using it for taxes. What are taxes? Taxes are payments that the government takes from us, meaning they levy it on or impose it on individuals, either on their income or on goods and services that we purchase, right? Or it can also be on businesses on their profits. So there are various aspects on which government charges taxes, and that tax is a revenue to the government. And if they charge us with taxes, we have to pay the taxes. There is no question there on whether we can pay unless they exempt us, which means they say, okay, we don't have to pay for certain reasons. If they say for this year you are exempt for taxes, then it's fine. But if not, if it's taxable, we call it taxable, which means they can charge a tax, means we have to pay the tax, okay? So first tax like that is called the sales tax. Sales tax, or you can also call one type of a sales tax is the value added tax, which commonly we see here, we call it the VAT, right? Value added tax. That is, for example, when you go to a restaurant and when you dine there, in your bill, they might add a value added tax. They might add a tax. What that is for the service and the food they provide, the government charges a tax on us consumers who go and consume the food there. Not on the business, it's on us who consume. So if I dine in for 1,000 rupees, I have to pay an additional tax. So let's say 15% is tax, I have to add calculate the 15% on my bill and pay extra tax. So the restaurant will give me the bill with the tax. So that's the total amount that I pay to the restaurant. And the restaurant has to pay it to the government. So that's the way. I pay it to the restaurant pays to the government. So that's what we are talking about here. So sales tax is a percentage of the selling price. So if you saw in my explanation, I said it's on the total bill. So that's why it's on the selling price of the goods or service also. And this is collected by the seller and paid over to the authorities, like I mentioned. So let's say if BB Limited sells goods for 100 rupees, sales tax of 20% must be added to the selling price and paid to the authorities. So how much should they collect from us? If the selling price is 100, to that they add a 20%, which is, if you calculate, it's 100 into 20%. That's this 20 that they add. So if the price, let's say, was 100.
Hello future chartered accountants. අද අපි ඉන්ෆිනිටි වෙතින් ඕගොල්ලොන්ට ඕගොල්ලොන්ගේ chartered accountancy හිනේ සැබෑ කරගන්න නව අඩි තාලමක් යොදවනවා. Right? We are planning on building up something new for you all to make sure that you achieve your chartered accountancy dream. ඕගොල්ලෝ chartered accountant කෙනෙක් වෙන path එක දන්නවද? Step number 1. ඕගොල්ලොන්ට A-level වලට minimum S3ක් හරි නැත්නම් AAT complete කරලා හරි ඕගොල්ලන්ට මේක පටන් ගන්න පුළුවන්. Step number 2. ඕගොල්ලෝ ඊට පස්සේ පටන් ගන්නවා business level කියන අධ්‍යයනය. ඒකෙදි ඕගොල්ලොන්ට කොටස් දෙකක් වැටෙනවා. එහෙනම් business level 1 සහ business level 2. මෙතනදී ඕගොල්ලන්ට business level 1 and business level 2 එකට ඕගොල්ලන්ට stages 4ක් වැටෙනවා. නැත්නම් subjects 8ක් වැටෙනවා. Step number 3 and step number 4. මේල corporate level and strategic level. මේකදී ඔයගොල්ලන්ට corporate level වලදී subjects 4ක් තියෙනවා. ඒ වගේම strategic level එකේදීත් subjects 4ක් තියෙනවා. Step number 5. මේක තමයි ඔයාලගේ last stage එක. නැත්නම් SL5 case study එක. මෙතනදී ඔයගොල්ලන්ට පොඩි task එකක් තියෙනවා. ඒ මොකද්ද? ඕගොල්ලන්ට ඕගොල්ලෝ study කරන subject එකේ ඕගොල්ලන්ට study කරන්න lecturer choose කරන්න පුළුවන්. right? So ඕගොල්ලන්ට මේ අපේ Infinity YouTube channel එකේ අපේ modules හැම එකේම lecturers ලා introduction sessions කරලා තියෙනවා. right? ඕගොල්ලෝ අපේ page එකට ගියොත් ඕගොල්ලන්ට හැම module එකේම introduction sessions බලා ගන්න පුළුවන්. Why do we do that? BL වලට සෑහෙන ළමයි ප්‍රතිශතයක් join වුණත් corporate level and strategic level continue කරන ළමයි ප්‍රමාණය ඉතාමත් අඩුයි. ඒ කියන්නේ chartered සිහිනය කරා යන ප්‍රතිශතය සෑහෙන ප්‍රමාණයක් අඩුයි. ඒක නිසා තමයි ඔයගොල්ලන්ට strong foundation එකකින් පස්සේ ඔයගොල්ලන්ට corporate level සහ strategic level වල හොඳ ආරම්භයක් ගන්න අපි students ලගේ පැත්ත බලලා අපේ lecturers ලා ඔයගොල්ලන්ට අපේ YouTube channel එකේ introduction sessions ටික mention කරලා තියෙනවා. So in our channel we support all the levels as well as we guide them to be all-rounders in businesses as well by giving them inspirational thoughts and knowledge on future skills. One thought for you. You wake up every day to get better today than yesterday. You try to reach your full potential by getting better every day. And that's the question for you.
You charge another 20% and you pay 120. So that's the same that I've showed here in percentage. If your selling price is 100%, to that a tax of 20% is added, and totally us as consumers we will pay 120 to the business. The business will collect the 120, pay 20 to the government, keep 100 for themselves. Right? So as a business, when you are preparing bills, you need to prepare it with the taxes. So basically, if we miss out on preparing the taxes, it's a loss for us. Then we will have to pay it out of our hand, which is not the way because these taxes are on the consumers, right? So it has to be passed to the consumers. Second is, you might use percentages for discounts. A discount is where when a product is sold at a lesser price than its original price, you call it a discount. So basically, let's say I want to attract customers, or it's a season, I want people to come to my store. So I give them some attractive discount. So from the selling price, we reduce the discount and pay the net figure. So that's a benefit to the customers. If the business wants to give a discount, then we get, as customers, we get it as a lesser price. On the business point of view, from the selling price, deduct the discount that you are willing to give. Your motive of giving discounts should be that will bring in a bigger crowd, so the overall sales has to increase, right? That's the motive. So if you see how to arrive at the prices, a discount is a percentage reduction on the selling price. This is usually offered as an incentive. Incentive means as a way of encouraging, right? Encouraging the customers to buy or buy more from the supplier. So that part is, as a supplier, let's say if I am a textile manufacturer, as in I produce clothes, then I might buy fabric from my supplier. My fabric supplier might say, okay, usually you can take 30 days of credit, which means I can buy the fabric and pay the cash in 30 days. But the supplier might also say, if you pay it within 5 days, I'll give you a 5% discount, a small discount. Still, I might take it. If I have cash, I might take the discount and get that 5% discount and pay them lesser, right? So that way it's a benefit to me. So the supplier can give me a discount in a business, or I can give my customer also a discount. So if there is a discount like this, let's say DD Limited sells a good for ₹100, a new customer has been offered a discount of 5%, right, if they order in the next 7 days. So how that works as the net price is, if your selling price is 100, from that you deduct the 5%, so this is in percentage, so you deduct the 5%, price paid by the consumer to us will be 95. Right, 100 minus the 5. Then there is something called income tax. Income tax is where taxes are charged on income. So the first three we saw were sales tax, the business charges. Second one we saw was discounts, right? So first we saw profits, then we saw sales tax, and then we looked at discounts, which again, as a business person, we will give a discount or get a discount. Now third is income tax. Income tax can be on individuals, meaning they don't have to be in a business, they can be earning a salary. So it can be on individuals, or it can be on businesses also, then you call it corporate income tax, right? So income tax basically is charged on your income. So if you take companies, it's charged on their final net profits of the business. Or if you take individuals, it's on our total income like salaries or any other income that you earn. Depending on the country, they will charge each income separately. Certain incomes, certain countries may not charge a tax on that also. So depending on the countries, these taxes, rates, what they charge, all that changes, right? So if you take income taxes, like I said, businesses and individuals pay income taxes on their earnings. The tax rates may differ at different levels of income. So something like this, first 3,000 is taxed at 10%. Income above 3,000, it's taxed at 20%. So imagine like that, they will put in different levels going upwards. So above 100,000 at one rate, about 200,000 at another rate, because the low income earners should be charged at a lower rate. Higher income earners have to be charged at a higher tax rate. That's why. But one thing to note is, if I say first ₹3,000 is taxed at 10%, that means 0 to 3,000. Is charged at 10%. Then if I say income above 3,000 is charged at 20%, that means from 3,001 rupees and above. Above that is only charged at 20%. So not the whole income. So if they earn 10,000, first 3,000 is charged at 10%. After that it's charged at 20%. Not the entire 10,000 is not charged at 20%, right? So E Limited has taxable profits of 100,000. First 10,000 is taxed at 5% and the remaining profits are taxed at 15%. So if so, see this taxable profits, this has to be rupees, right? So taxable profits are in total, let's say 100,000. First, your tax is on the first 10,000, 10,000 you charge a 5%. So you have to pay on 10,000 a 5%, which is 5,000. After that, now out of 100,000 profit, 10,000 is done with 5%, remaining 90,000 goes at 15%. So that is this rate. That's on the remaining 90,000, right? So that's why remember I said the entire 100,000 is not on the high rate. They can have gaps. We call them tax brackets. So based on every bracket, your income level, wherever your income level falls in that bracket, the tax rates will change. So the first bracket will have one rate. So if you earn 100,000, first 50,000 may be on one rate, next 50,000 on another rate. Whole 100,000 won't be in the same rate, right? So that's income taxes, right? So the next section to look at is how to calculate percentage changes. So if there are changes in percentages, right? So let's look at that. So let's say a percentage increase or reduction, because a change can be a percentage increase or a decrease. So how do you calculate a percentage change, right? So let's go to the example directly. The price of a product has been reduced from 490.99 to 340.99. So 490.99 to 340.99. So net change, if you see, that's 150 rupees change. Now if I ask, okay, rupees change is 150, but as a percentage, how much did this change by? That's what we have to calculate. So you can see the price reduced, right? So the price of the product has been reduced. So the percentage change is, take the reduction, that change is of 150, right? So 150 reduced from where? From 490.99, right? So from 490.99, it dropped down to 340.99. So we need to see what was the percentage change. So 150 was the change in rupees, but as a percentage means from where? From 490, 150 change. So 150 over 490.99 into 100%, it's a 30.6%. So it's always the question of from something, right? So that is why you take the change as a percentage of the original value. From where? From 490.99 rupees, it dropped to 340.99. So that's why this percentage change has to always be change divided by the original value into 100. So this is how you calculate a percentage change. Another example, the price of a product has been increased by 25%. So price is up by 25% increase. Originally the price was 200, right? What is the new price? Again, see, from where? From 200 rupees you go up by 25%. So 200 has to increase by 25%. So there is one way you can do, of course. You can take 200, calculate 25%, which is 200 into 25% is rupees 50, right? Rupees 50. Now, what happens is from 200 it has increased by 50. So 200 plus 200 plus a rupees 50 will be 250, right? So this is the actual price after the change. But as a easier method, we can directly say 200 into 1.25, right? How do you get this 200 into 1.25 is basically, how you do that is 25% is basically a 0.25. Take your calculators and check and see 25%. 25 divided by 100 is a 0.25. So that's what we did. To the existing 100%, you add a 0.25, that is that 1.25. So now see, you don't need all of this. 200 increases by 25% means from 100% you add a 0.25, it's a 1.25. That's what you need. So this is a shorter way. So get used to this. It saves a lot of time. So if they say it increased by 25%, it's going to be 1 plus a 0.25, which is 1.25. Now the same thing, I have given an example at the bottom for a decrease. The price of a product has been decreased by 10%. Reduction was rupees 30. What was the original price? So first of all, before looking at any of this, think decrease by 10%. So from 100%, it fell by 10%. Okay, so that means from 1, you deduct a 0.1. 10%, check and see. 10 divided by 100 is 10%. That's a 0.1. So you will have a 0.9, right? So 0.9 is the balance, right? So now what they said is that reduction was rupees 30. So 10% is rupees 30, right? So we need to figure out the original price. Original price was 100%, which is 30 divided by 0.1 into 100% into 1. So you will get rupees 300, right? 30 divided by 10%. So, or you can say 30 over 10% into 100%. 100% is 1, right? That's what I showed here. 100% is 1. So, you can ignore the 1. No problem. So, you'll get the original price as 100 rupees. Now, this is a more detailed scenario. We are not going to have changes in one place, but we are going to look at all the changes, right? Consider the following scenario. SS Limited has plans to sell 1000 units during the next year, making a profit of 200,000. So, if you take the sales, they have arrived at sales as 1000 units, like they said, into 1000 rupees per unit. So, per unit price is rupees 1000, right, per unit. 1000, this 1000 is the units. So, they get a value of 1 million. Sorry, this has to be rupees. 1 million rupees. Variable cost is 1000 units into 400 rupees. What are variable costs? Variable costs are costs that change with your output. Like if I am manufacturing clothing, the fabric, that material, that dye, the thread, the buttons, all those are variable costs because they increase with the number of clothes I make. More the clothes, more the fabric, more the dye, more the thread, more the buttons, likewise. Those are variable costs. So that is dependent on the units. So 1000 units into 400 per unit. So it's like saying to manufacture one clothing, let's say one t-shirt is 400 rupees and I am selling that t-shirt for 1000 rupees, right? Fixed costs are another 400,000 rupees. What are fixed costs? Fixed costs are costs that don't change with your output, like rent. See, if I have a building and if I make 1000 t-shirts, still the rent is the same. If I make one t-shirt, still the rent is the same, because the rent won't depend on the quantity you produce, right? It's a fixed cost that you will anyway have to pay. Even if you don't produce, if you close the factory, close that business and keep for a few days, still you have to pay rent, right? So that kind of cost is a fixed cost. Now what the question says is, calculate the change in profit. Remember, you have to calculate the change in profits if sales price was increased by 2%, sales volume fell by 10%, variable costs per unit increased by 5%, fixed costs increased by 2%. Now not one adjustment, you have multiple adjustments. Here we have 4 variables, they have changed. So sales price increases up by 2%. Sales volume falls down by 10%. Variable cost per unit, right? Per unit, don't forget that. Per unit increases by 5%. Fixed costs all increase by 2%. So now we'll see how to do this one by one. So first I'm going to start with the sales part. Revisit again, check. What I should do with sales is, sales price was increased by 2%, volume fell by 10%. Okay. So first we'll do the price increase. Price increase will be that, now we say sales price increases by 2%. So take the original price 1000 rupees. How do I know that? See here, 1000 rupees, right? So 1000 rupees, increase it by a 2%. That's the 2% they said. So again 1 plus 2%. Basically 1 means 100%, right? 100%. So you can say 100% plus a 2%. But we know the shorter form is to just say 1.02, right? So 1.02 into 1000, the new price is 1020. Then volume, they said decreases by 10%. So decrease, how do you do a decrease? If a price increase is or any increase is 100 plus the percentage, the decrease should be 100 minus. So what this 90% means is 100% minus the 10%, reduced by 10%. So decrease by 10%. So that's why we say 90%. So the quantity will be 1000 units into 90%, 900 units. So what is your sales revenue? Sales revenue will be new price 1020, new quantity 900, totally 918,000. So see, from the previous 1 million, which was 1000 into 1000, now we increased price and quantity, and we increase the price, decrease the quantity. So your new sales is 918,000. Sales has reduced because the price increase was small, quantity drop was big, right? That is why your sales revenue has overall dropped. Now the same we are going to do with variable cost. Variable cost, what they said was, variable cost per unit increased by 5%. So what we are going to do is, like we did for sales also, with 100 we are going to add the 5%. So that's the 105% or 1.05. So this is 105 percentage, okay? 105 percentage is 1.05. So that's what we used here. 400 is your initial variable cost, increase it by 5%. So 400 into 1.05 is 420 is your selling price. Now one thing to remember, I said variable costs are costs that change with your quantity. Now remember, you have to notice we changed the quantity. Sales volume reduced by 10%. So I can't keep the old quantity. I have to take the new quantity, which is 900, that comes from here, right? The same 900, use that 900 and find the variable cost as 420 into 900, which is 378. So this is my variable cost, this is my new sales. So this is how you calculate a new sales value or a new variable cost value once each and every variable changes. So we have nicely increased sales price, reduced sales quantity, found the sales revenue, right? So sales. Then we increased variable cost per unit and we remembered quantity was decreased. So we reduced the quantity here also and found the variable cost, right? So let's go to this. Remember, this was your first profit statement. Now your new profit, after these changes, we have done the sales price increase, sales volume decrease, variable cost increase also. We only have to do the fixed cost increase. So to do that, here revised profit, I have the sales, I have the variable cost, fixed cost increases by 2% like we previously did. Now just in one line I am going to write it as 400,000 into 1.02, right? We don't need another working, we know how to do this, right? If it's up 2% is 1.02, up 10% is 1.1, down 10% is a 0.9. Up 50% means 1.5. Likewise, we will just change this number and we know how to calculate the fixed cost that increases by 2%. So done. If you notice, another small shortened way what I have done is, this whole thing which we did before, I have shortened it. So if you take the sales, this was your sales, this was the, up was the sales price, below was the quantity. So we combine that here and put it in one line. Sales, what happened? Your volume fell by 10%. So you can say 1000 into 90%. Price increased by 2%. Price increase. So 1000 into 1.02. So without having a previous working, you could have done like this. That's shorter. Once we get used to doing this, like this we can make it much shorter and directly put into 1.02 into 0.9 likewise. So same secondly with variable cost, we said variable cost per unit increased by 5%. So we say 400 into 1.05, but don't forget your quantity changed, so 1000 into 90%. Same thing as before, but I have put that into a shorter working or shown you how you can just directly put this into a just 3 lines, right? So this is in rupees. So your final profit is 132,000. So your previous profit was 200,000. New profit is 132,000. What is the change in my profit? How much did it change by? If you take in numbers, 200,000 reduced by 130, reduced to 132. So the difference is 68,000, right? 68, right? A reduction. So if you see the change in the profits is, as you see the number, it's a 68,000. Now as a percentage, what is it? The percentage change is the value change 68,000 divided by the original 200,000. Remember from where? From 200,000 it has dropped. So from 200,000, that's why your lower number, it's called the denominator. On top, the number on top is numerator, bottom is denominator. So denominator is 200,000. So your percentage change is 34%, right? So this is how you calculate a percentage change in profits. So this is a scenario where we did multiple changes. And remember, I showed you how to do that with just step by step, right? Each and every price, quantity, unit cost quantity, each changed. And the third, I showed you a method where we can do all in one. Put the sales price in one line, variable cost in one line, fixed cost in one line. So you get used to it. Once you get used to it, you can directly go to this method. So now the final bits are just to look at how to give good numbers which are simplified at the end. So one thing is there is something called approximation or rounding off, we say. So you might be asked to round off your answer. Now your rounding off can impact a lot of results, which we will discuss, right? So there's a bit to discuss there. For example, now first of all, rounding off is where we see a number like this, 5,726.46. There are two decimals. These 4 and 6 are called decimals. After the main numbers, whole number, you have two decimals. So this monthly bill for electricity for May was 5,726.46. It can be rounded. Rounded means approximated, right, to the two different levels. First, to one decimal. One decimal means you'll call it 5,726.5 because 46 is closer to 5. So if you take this 5,726.46, the closest one decimal is the two options you have are 5,726.4, 5,726.5. But the closer one is where you are closer, which is the second 5,726.5. So that's to one decimal. Same way in total number, we are going to now remove, let's say, 2 decimals out, which means I don't want both the decimals. So when you remove that, you can fall to a 5,726 or 5,727. Now which are you closer? Check and see. 5,726.46. Whole number is closer to 5,726. Why? Because it's a 0.46 on this side, right? On the other side, the gap is a 0. You can calculate and see. On the other side, the gap is a 0.54. So the gap is bigger on that side now. So don't take that, take the closer one, which is 5,726. So here to the nearest rupee. Same way, you might be asked to round off to the nearest 10, which means it will be cut the last, as in the last one is going to be 0. So 5,726 can go to 5,720 or 5,730, but the closer one is 5,730. 5,726.5 or 5,726.46 to the nearest 100 will be a 5,700 because it's only 30 odd less. If it's to 5,800, this won't be close to 5,800, no, it's too far. Then in terms of thousands, if they want, closest is 6,000. The closest to in thousand are either 6,000 or 5,000. But you have gone from 5,000 to 5,726, so that's closer to 6,000. So that's why we round it off to 6,000. So these are your possible round offs which they might ask you to round off to 1 decimal, 1 nearest rupee, 10 rupees, 100 rupees, 1000 rupees likewise depending on how your number is. Now by number of significant figures. Significant figures are, if you look at this, they might say round it off to 1 significant figure, 2 significant figures, 10 significant figures likewise. So significant figures are like this, where if you take 9 significant figures, this example is 21,854,864 rupees 21 cents. How many numbers here are? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. 10 digits we say. 10 figures there, okay. So now that 10, I am going to make it into 9 significant figures. So basically take 9 numbers, remove the last one, round it though, round it to the correct one. So 21 cents will go to 20, right. If you want 8 significant figures, again round it off correctly. You don't need the last 2, then you will have 8, but make sure you round it off correctly. It will be to 21,854,864. Same way 7 significant figures, 1 less, the last one can be a 0, will be a 0. So that will be again to the correct round off, so 860. Now then 6 significant figures, so only 6 numbers of figures, last are zeros. So zeros are not significant, others are the significant ones. In this case, round off 864, rounding off will become where it goes to 900. So be careful not to 800. Don't just keep cutting and coming to 800. No, remember round off to 900, the closest. That's the whole point, right? So then next one, 855,000. See, round off to the closest. Likewise, you can do to 4 significant, 2 significant or 1 significant figure, which is just 20 million, right? So now when you do this rounding off, you can have errors, right? So calculations are, if calculations are made using values that have been rounded, then the results of such calculations will be approximate. So you may not find the exact answer, but this answer is going to be approximate, right? Because you rounded off here and there, right? So the maximum possible error can be calculated. So they might ask you to even calculate the error. So first they might tell you to round off, then say, okay, what is the maximum error we can have? So let's say that, so if, however, provided that we are aware of the maximum error, we can still draw conclusions from the results. So when you do a approximation, you will have errors, correct? But if you know, let's say as a business person, now you have rounded off everything, but if you know the maximum error and if that is small, you won't mind rounding off because it's a bit of a headache to see decimals like that now. So if you know, okay, rounding off to 1 decimal, 2 decimals, rounding off to the nearest rupee, 10 rupees, 100 rupees, whatever that is comfortable to you, and if that the error, the mistake we can have after all the rounding off, the difference between the actual and the rounded off, if it's not so big, we are okay. So to know that, how much error needs to be calculated. So let's look at that. So imagine, suppose that the population of a country is stated as 40 million. This figure could have been rounded to the nearest million, right? Therefore, the country's population will be around 40 million plus 500,000 or minus 500,000, correct? Because it could have been a 40.5 million or it could have been a 39.5, right? Which we brought down to 40 or which we brought up, brought up to 40 or brought down to 40. So that depends on your number, and I don't know the number. Maximum I know it could have been 40.5 because 40.6 would have been rounded to 41 million. So that's why based on that, maximum this can go up by 500,000 or down by 500,000. So these are the two possible numbers. That's why we say it could have been up or down by 500,000. So 500,000 is your maximum absolute error, right? Just a simple estimate like that. So we look at another example. A chemical producer plans to sell 50,000 liters. Okay, so plans to sell 50,000 liters rounded to the nearest 1,000 liters. Remember, nearest 1,000, right? So it could have been, I'll just give this, it could have been 50,000 liters, which was actually 50,500. I could have brought it down to 50, or it could have been a 49,500. I could have taken it up to 50,000, right? There's an error, something rounded off. So they say a chemical producer plans to sell 50,000 liters to the nearest 1,000 liters of a particular chemical at a price of rupees 10. Now 10 is also to the nearest rupee. So it could have been a 9.5 or upper 10.5, right? Cost of chemicals or cost of materials used to produce chemicals is expected to be 100,000 rupees, but depending on wastage level, this is subject to be to an error of 5%. So even that 100,000 has an error of 5%. Labor costs are estimated to be 300,000. Here also you have an error of 10%, depending on overtime and pay negotiations. Calculate the maximum absolute error. So we need the amount, maximum error for revenue and costs, right? So let's look at that. Quantity sold. See, like I mentioned there, I have only put the errors first. Quantity sold was 50,000 liters, and I showed you that could have been 50,500 or 49,500. So your maximum error is 50 liters, right? So actually it could have been 500, the maximum error is 500 liters. I said 50. Maximum error is 500 liters. This should be 500 liters one way and 499 the other way, basically because if it was 50,500, you put it to 50,000, or 50,499 also will come to 50,000, right? So same way on the other hand also, just that if it is a, let's say, okay, if it was a 50,499, your difference on this side from with 50,000 is a 499 difference. If this was even 50,501, we won't round it to 50, right? We won't round it to 50,000 because it's 1 unit above 500, it will automatically go to 51,000. Right? So remember those, even if it's 1 unit away, it's going to go to the next level, alright. So the next one is material. So material, remember, particular chemical at a price 10, cost of material used to produce is expected to be 100,000 but with a 5% wastage difference. So and before that chemical at a price of rupees 10 to the nearest rupee. So those are two things. So rupees 10, right, will have only a 50 cents difference, because it could have been 10 rupees 50 cents which I brought down to 10 rupees, or 9 rupees 50 cents which I brought up to 10, right. Material 5% difference. So how do you calculate the value is 100,000 into 5%. That gives you a 5,000. Labor, they said 300,000 can have a 10% difference. So that is 300,000 into 10%. So that's a 30,000. So those two were not given in numbers. We had to calculate the number based on the percentage. So by this, now you know, in terms of quantity, maximum error is 500. In terms of price, maximum error is 50 cents. In terms of material, maximum error is 5,000 rupees. Labor, maximum error is 30,000 rupees. So totally seeing, quantity difference can be 500 and a 0.5. So maximum you can get biggest revenue. 50,000 can increase by 500 and become 50,500, right? 10 rupees could have been up 50 cents, could have been 10 rupees 50 cents, right? So that price maximum is 10.5. Look at the lower side. Quantity 50,000, like I mentioned, it could have been a 49,500. So lower side, it could have been a 49,500. Price 10 rupees could have been a near to the nearest rupee. No? It could have been 50 cents less, 9 rupees 50 cents. So it could have been least 9.5. So if you multiply the maximum side, you will get 530,500, lesser side 470,250. So basically what I did is, maximum quantity 50,000 could have been 50,500 max, not even 50,501. Remember, if it was 50,501 units, I would have rounded it up to 51,000, right? So this is maximum 500 units up, so 50,500 max. Price 10 rupees could have been maximum 50 cents up. If it was 10 rupees 60 cents, they won't give 10 here. They would have given it as 11 rupees. So that's why this can be maximum 10 rupees 50 cents. So using the maximums, your highest revenue is 530,250. Using the minimums, your minimum revenue would have been 470,250, right? So what is your difference there in the error wise? Using the estimates, if I calculated, I would have calculated my revenue as 50,000 into 10. This is the estimate. Estimate means using those rounded off ones, 50,500. But actually, it could have been maximum 530,250. So maximum from here to here is 30,250 on the higher side, right? Check with the minimum, it could have been 470. So on using the minimums, if I take, this could have been a 29,750, gap between 470,250 and the 500, right? So the error, bigger error is here. So the maximum error is 30,250. So you could have gone up to a maximum 530, 250. This is the high side. Lower side, we could have gone until a 470, 250. I took the lower price, lower quantity, high price, highest quantity, right? Now in between is the 500,000 we estimate. So the gap between these two could maximum be this side 30,250, or on the lesser side 29,750. You can't have both errors because either it's high or either it's low. Na? We can't have quantity high and low, price high and low. No. Either the price was lower or either the price was high. Either quantity was high or low. One of those. So that's why choose one of those and say that the highest error is 30,250, the higher one, right? So that's how you do these errors. Now the biggest revenue is what I selected. Same thing with cost of production. Go back. Material could have gone up by 5,000, labor could have gone up by 30. Or material could have gone down by 5,000, labor could have gone down by 30,000. So, material, make it increase by 5 and labor increase by 5. Or if you take lesser side, decrease and decrease. Sorry, what I highlighted. Material increase by 5, labor increase by 30,000. Minimum material reduced by 5,000, labor reduced by 30,000. So your two results are either 435 or 365. Now in the middle you would have got 100,000 plus 300,000, which is a 400,000. This is the total which we estimate. How did I get that? These two, which they stated, rounded off 300,000 and the rounded off 100,000, right? We would have just said 400,000. But now we are checking. Highest it would have been 435, right? So highest possible was 435. Lowest possible would have been 365. Now check the difference. The bigger error is on there, it's a plus 35, below also is a 35. So both errors are same, 35, here also a 35. So the error is just same. So we take 35 over 400,000. If you need as a percentage, it's a 8.75 difference in percentage. So you can say maximum error would have been 400,000 up or down 8.75%. So this is the way we calculate it, right? So these are the maximum errors. So we looked at the maximum errors with revenue, price, quantity, both combined, maximum price, quantity, minimum revenues, took the biggest difference. Material labor, highest possible cost, material labor, lowest possible cost, took the difference. You have to choose the highest. Here both were equal. So what we can do is, you can follow a formula, that is, you take for the maximum error of revenue, take the largest difference in volume and the largest difference in unit price. So largest difference could have been, maximum value of volume could have been 50,500, maximum selling price could have been 10.5, right? So the approximate value is 50,000 into 10, 500,000. So your change is here, okay? The only reason is, or only way of the basis of this is, if it was a, let's say,
Hello future chartered accountants. අද අපි ඉන්ෆිනිටි වෙතින් ඕගොල්ලොන්ට ඕගොල්ලොන්ගේ chartered accountancy ඉහනේ සැබෑ කරගන්න නව අඩි තාලමක් යොදවනවා. Right? We are planning on building up something new for you all to make sure that you achieve your chartered accountancy dream. ඕගොල්ලෝ chartered accountant කෙනෙක් වෙන path එක දන්නවද? Step number 1. ඕගොල්ලොන්ට A level වලට minimum S3ක් හරි නැත්නම් AAT complete කරලා හරි ඕගොල්ලන්ට මේක පටන් ගන්න පුළුවන්. Step number 2. ඕගොල්ලෝ ඊට පස්සේ පටන් ගන්නවා business level කියන අධ්‍යයනය. ඒකෙදි ඕගොල්ලොන්ට කොටස් දෙකක් වැටෙනවා. එහෙනම් business level 1 සහ business level 2. මෙතනදී ඔයගොල්ලන්ට business level 1 and business level 2 එකට ඔයගොල්ලන්ට stages 4ක් වැටෙනවා. නැත්නම් subjects 8ක් වැටෙනවා. Step number 3 and step number 4. මේල corporate level and strategic level. මේකදී ඔයගොල්ලන්ට corporate level වලදී subjects 4ක් තියෙනවා. ඒ වගේම strategic level එකේදීත් subjects 4ක් තියෙනවා. Step number 5. මේක තමයි ඔයාලගේ last stage එක. නැත්නම් SL5 case study එක. මෙතනදී ඔයගොල්ලන්ට පොඩි task එකක් තියෙනවා. ඒ මොකද්ද? ඕගොල්ලන්ට ඕගොල්ලෝ study කරන subject එකේ ඕගොල්ලන්ට study කරන්න lecturer choose කරන්න පුළුවන්. right? එතකොට ඕගොල්ලන්ට මේ අපේ Infinity YouTube channel එකේ අපේ modules හැම එකේම lecturers-ලා introduction sessions කරලා තියෙනවා. right? ඕගොල්ලෝ අපේ page එකට ගියොත් ඕගොල්ලන්ට හැම module එකේම introduction sessions බලා ගන්න පුළුවන්. Why do we do that? BL වලට සෑහෙන ළමයි ප්‍රතිශතයක් join වුණත් corporate level and strategic level continue කරන ළමයි ප්‍රමාණය ඉතාමත් අඩුයි. ඒ කියන්නේ chartered සිහිනය කරා යන ප්‍රතිශතය සෑහෙන ප්‍රමාණයක් අඩුයි. ඒක නිසා තමයි ඔයගොල්ලන්ට strong foundation එකකින් පස්සේ ඔයගොල්ලන්ට corporate level සහ strategic level වල හොඳ ආරම්භයක් ගන්න අපේ students ලගේ පැත්ත බලලා අපේ lecturers ලා ඔයගොල්ලන්ට අපේ YouTube channel එකේ introduction sessions ටික mention කරලා තියෙනවා. So in our channel we support all the levels as well as we guide them to be all-rounders in businesses as well by giving them inspirational thoughts and knowledge on future skills. One thought for you. You wake up every day to get better today than yesterday. You try to reach your full potential by getting better every day. And that's the question for you.
If it was a 49,500, it would have been approximated to 49,000 because we round down whenever we have doubts, right? So 49,500 would have been rounded down to 49, right? But if it wouldn't have gone up to 50,000. We won't overestimate. But if it was a 49,501, definitely you will round this to 50,000, right? So because of this only we thought, right, now where is our maximum possible gap? Here the gap is 49,500 means the gap is a let's see, the maximum gap here is 499, right? But the gap between 50,500 and 50 is 500, right? So the gap is bigger with this. So this is a gap of 500. That's why you choose the higher level. So always if you want a shortcut, look at what the high possible side is. 50,000 would have gone to 50,500 max. 10 rupees would have gone to 10.5 rupees max. Take the two max stuff and calculate revenue and check the difference. That will be your maximum error. So if you want to use formulas, you can also use formulas to arrive at these errors. So how you do that is, usually we'll have to do the multiplication. So like I mentioned, you take maximum of A and B, like maximum quantity, maximum price, those two. So this is a maximum error. So that's what I've shown here in multiplication. If you want the maximum error, multiply maximum A, maximum B. If you want the lowest number, multiply the lowest A, lowest B, right? So this is the two lowest revenue and the highest revenue. So if you need to do anything with a division, if you want the maximum, the meaning is, let's say 100 divided by 2 will give you 50. But if you take 100 divided by 5 will give you 20. So see, on top the value has to be large, bottom value has to be small. Then only your number answer is bigger. That is why maximum of the division should be highest A and the lowest B. Both being high won't help. See, both high gave you a small answer. That's why highest A and lowest B. If you want the other way, the minimum when you divide, you will take the lowest A and the highest B. You divide by a higher number. Like for example, lowest A, let's say 50, divide by highest possible B. The high number I used here is 5. So see, this number is 10. So this is a smaller answer. The answer is smaller. So if you want the minimum in division, with division, you have to divide the small number by a bigger number, right? On the other hand, if you want to take the additions and subtraction, again check with numbers. Maximum addition, add both the maximums. For minimum of the additions, add both the minimums. If you want the maximum difference, take the highest number, deduct the smallest number, right? So maximum A minus minimum B. Like if I told you A can be 5 or 10, B can be 3 or 7, right? Imagine this. I want to do the maximum A minus B, right? What I will do is maximum A minus B. From A, select the highest 10. From B, select the lowest 3. That gives me a gap of 7. If I did the other way, highest minus highest, my gap is small. 10 minus 7 is just 3. So that's wrong. That's why highest from one side, lowest from the other. If I want minimum difference, opposite way. Take the lowest from A, here it's 5. This will give you minimum. Lowest from A and the highest from B, which is 7, which is a minus 2, a very negative difference, right? So this is something you need to think and do. Or you can work it out with numbers, like when you have A and B, if you want, do all the deductions and choose the highest, but that's just time consuming. So that's why I have to think, okay, what will give me the biggest gap? Highest here, lowest here, right? Smallest gap, lowest here, highest here. Like that you'll have to think of it, right? So that's how we do the maximum errors. So with that, we are done with this section on percentages for business. So this is an overview on how to use percentages, and when you do further calculations, how to look at percentage changes. And finally, even make decisions on when you approximate and round off what's the maximum error. So we are done with percentages of business. Thank you.